Good morning, everyone. This is Marshall Gittler bringing you the morning comment for April 14th. The dollar is opening generally weaker in Europe today, with no real news that I can find behind the move. Fed funds rate expectations retreated modestly, even though San Francisco Fed President Williams said he saw less risk that the U.S. economy might fall back into recession once the Fed starts raising interest rates. Among the G10 currencies, the dollar is higher only against the euro, while the yen is the biggest gainer. I'll explain why in a moment. Today's Financial Times says that Greece is preparing to default on its loans from the IMF unless it can reach an agreement with its international creditors by the end of April. A default would almost certainly lead to the suspension of the ECB's emergency liquidity assistance for the Greek financial sector, the closure of Greek banks, capital controls, and just general economic instability. A Greek official, of course, denied the reports, but it does seem that the moment of crisis is near. A German newspaper says the country has until next Monday to present a revised economic reform plan before Eurozone finance ministers meet on April 24th to decide whether to unlock the necessary emergency funding. Now, the likeliest course of events, I believe, is that the Greeks come up with something a bit more to the EU's liking, and the EU deems it sufficient in order to prevent a crisis. However, nothing is ever certain in human events. The yen jumped on comments by an advisor to Prime Minister Abe, Mr. Hamada, that the yen is too weak and that 105 would be a more appropriate level for dollar yen. Now, it's true that 105 is closer to the yen's purchasing power parity rate, but PPP has never been a big constraint for the yen. The fact that the Bank of Japan has failed to reach its 2% inflation target, plus the need for Japanese exports to remain competitive, makes me believe that they will probably encourage further depreciation. So I remain bearish on the yen. Today, the ECB publishes its bank lending survey for the first quarter of the year. This will be the first survey after the bank initiated its quantitative easing program, so it may show whether the ECB's efforts have boosted banks' willingness to lend. In the UK, we get the CPI for March. The headline figure is forecast to have remained unchanged at 0% year-on-year, but a dip into deflation wouldn't be much of a surprise. That would further push back expectations of a rate hike and increase the selling pressure on sterling. Personally, I still expect cable to continue its slide and to challenge the psychological zone of 145 in the near term. In the U.S., retail sales for March are due out. Sales are expected to bounce back after declines in the last 3 months. Now, a positive figure would support the theory that weakness in the preceding 2 months was mainly due to the harsh weather and could add to the dollar's strength. In the U.S. PPI for the same month is also going to be released. Tomorrow morning, before the European day begins, a lot of Chinese data for March is released. Retail sales, industrial production, fixed asset investment, and the all-important first quarter GDP figures. GDP is expected to slow to 7% year-on-year from 7.3%. This is the government's target, 7%, so it wouldn't necessarily set off any alarm bells. However, Bloomberg calculates an estimated GDP figure based on frequently released data, and their estimate has fallen to 6.3%. So the risk to that figure, and of course the risk to the Aussie and Kiwi, is probably on the downside. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.